Hey guys, welcome again to another episode of Everything Business. This is another accounting tutorial, and for those who are new to the channel, I want to welcome you and I want to thank you for viewing. Please remember to like, subscribe, and share. For my regular viewers and listeners, thank you for always coming back. Continue to share and continue to encourage other persons to like and subscribe to this channel. Right, I really appreciate you guys, and I hope that the content that is being shared here has been helpful to you. Well, I've been getting a lot of feedback that it has been helpful, so it is encouragement, and I will continue to upload videos like these as long as you guys continue to encourage me and continue to subscribe and continue to share. Alright, so today we're going to be talking about bank reconciliation statements. I have heard many students complain that this topic is a hard topic to understand, or it's a difficult topic to understand. I have been getting requests about this topic, and so we are going to do this topic. It is not a hard topic, it is a very simple topic, and I hope that this video will help you to love and to understand this topic better. Alright, so let's get right into it. Now, before we even jump into some calculations or anything concerning bank reconciliation, there are certain terms that we need to know, certain banking terms, right? And knowing these banking terms will help you to better understand the jargons that we may use or the terms that we may use in bank reconciliation. So we're going to look at some very important terms. So the first thing, bank statement. So a bank statement is a summary of the customer's account with the bank. Everybody, once you're a part of a bank, you can get a bank statement. All you need to do is you can request it from your bank, or most banks will now just email you a copy of a bank statement. So the bank statement is basically your dealings with the bank. Bank charges, right? It's a charge imposed by the bank for the services that they provide, and it means that money is leaving your account. Right, then we have bank giro credit, which is also called credit transfer, and this is money transferred, being transferred into your bank account, and it's what people normally call a wire transfer. So when people just deposit money directly into your account, right? We have bank overdraft, right? It's another term that you need to know. It's a service that is provided by the bank, whereby a customer is allowed to withdraw more money than what is actually in their account. And this service causes the bank account, your bank account, to have a credit balance. Then we have direct debits. Now, direct debits, right, is where permission is given to a creditor to take money from your bank account to pay bills, etc. I must stop right here though, right, to tell you guys that in the banking system, in the banking world, it's a bit different from what we have been doing so far in accounting. So far in accounting, when we are talking about the double entry system, we normally say that if an account is receiving, we would debit the account, and if the account is paying out, we would credit the account, right? That would generally be for assets. Now, in the banking system, it's a bit different, right? So in the banking system, if your account with the bank is increasing, then the bank will make a credit entry. It's actually the opposite. The bank will make a credit entry if your account is receiving, and the bank will also make a debit entry if your account is paying out, or if money is leaving your account. Now, that is very important for you to understand. Alright, and here is a picture of what a bank statement would look like, right? Because bank statement is very important in this topic, right? So you need to know at least what a bank statement would look like. Alright, so there we go. Alright, some other important terms that we need to understand. Standing order. Now, a standing order is a service that is provided by the bank where they will make payments from your account on your behalf, such as like mortgages, insurance, premium, etc. Alright, so with a standing order, it's different from a direct debit. So with direct debit, you give the permission to the creditor to take money directly from your account, right? With standing order, you give the bank permission to make payments on your behalf. Then we have what is called unpresented check. Now, unpresented check is when you pay out a check, or when you draw a check. They like to say it that way in business. So a check is drawn, but has not yet been presented to the bank at the time of the making up of the bank statement. So by the time the bank statement is being created, then you pay out a check, and the check has not yet been cashed at the bank. right? Then you have out of date checks, or what we would call in this topic late lodgements. Now this is when checks are received but are presented to the bank after the bank statement have been written up. It is important for you to realize, gentle people, that if you are paying out check in your cash book, it would be on the credit side, and if you are receiving check, right, then in your cash book it would be on the debit side. Alright, so that is very important. Then you have dishonored check. Dishonored checks. Now when a check is unable to be cashed, right, that is what it is called when we say dishonored check. Is when a check is unable to be cashed, right? And it, it may be because of lack of funds, or the check has been stale dated. All right, sorry for this spelling right here. This is the American spelling, so apologize for that. All right, so what then is a bank reconciliation statement? So a bank reconciliation statement is a calculation comparing the cash book with the bank statement, right? Essentially, or ideally, both cash and bank statement balance should be the same because you are both keeping the same records. So in your business, you have a cash book where you write down your dealings with the bank. Every money where you pay to the bank is written down. Every check where you receive, right, is also written in your cash book, right? The bank also keep a record of your dealings with them. And so it goes without saying that both of your accounts should be equal, right? But this is not always the case sometimes. And there are times when the cash book balance and the bank statement balances will differ. And when that is the case, some updating needs to take place. So some changes and figuring out need to go on, right? And that is where the bank reconciliation statement come in. So if there are items that are in the bank statement but not in the cash book, then we need to update the cash book. We need to bring the cash book up to date, because guess what? There were items there were transactions that took place as it relates to your account that apparently it is the bank and whoever, right, deal with the transaction, but you never know about it. So that is why it's not in your cash book. So you now need to update your cash book, right? And if there are items in the cash book but not in the bank statement, then we need to update the bank statement, quote unquote, update the bank statement by creating a bank reconciliation statement. So there may be items in your cash book, right? Your dealings with your customers and whatever the case might be, but the bank don't know about it, right? And so you have information on your cash book or in your cash book, but then it's just not in the bank statement. And so then that you need to update the bank statement, quote unquote, right, by creating a bank reconciliation statement. I hope that you guys are getting it, right? The video is going long, so just go and pay attention, and if you want you can skip through using the chapters. Alright, so let's look at an example, right? 2003 past paper question. Alright, so here we are given a cash book, and usually how they give this question is you're given a cash book and you're given a bank statement, because what you need to now do is you need to compare, right, what is the information that is in the cash book with the information that is in the bank statement. Alright, and what you're going to be doing is you're going to be ticking off common items. So items that you find similar in the cash book and the bank statement, you will tick them off, because your aim is to find the items that are not ticked or that are not there that are not common to both of them. Alright, and so, right, what you will be doing now, you'll be taking your pencil or you take your pen, whatever writing device that you have, and you will be ticking off the items. Just to remind you that items that are on the debit side of the cash book, right, would be shown on the credit side or in the credit column in the bank statement, and items that are on the credit side of the cash book, right, would be shown on the debit side of the bank statement. Alright, so that is very important for you to remember. Always remember that cash book, the items are on the debit side, you find them on the credit side, or in some questions they may have deposits here, right, in the bank statement, and where you see debit in the bank statement, they may have withdrawals there. It is the same thing. Alright, good. So we know that in the cash book, every item that is on the debit side, meaning that you are receiving checks, right? The items that are on the debit side means you are receive check, and the items that are on the credit side of the cash book mean that you are paying out check. Alright, so get these these concepts clearly. All right, so let's do our ticking off, right? So I can see $1,000 here, and I can see another $1,000, which is the opening balance on the bank statement. All right, the credit, the CR over here in the bank statement is stand for credit, right? And you want your bank statement to always have credit balance, because remember that a credit balance on your bank statement would indicate that the bank owes you money and not you owe the bank money, and you want the bank to always owe you money. All right, that is why you save with them, so that them owe you your money, them hold your money for you. All right, so yeah, so we take off the 1,000 because we see it, the opening balance, right? We realize so we have a cash here, $250. Look on the credit side for it. Yes, I see it. Then G Thompson, $75. I see it in the bank statement. Yes. All right. C Coombs, 75. I don't see it. Y Davis, 110. I don't see that on the credit side. E Ellis, 65. I don't see that. All right. So, all right, I'm going to now look at the items on the credit side of the cash book. All right. 400. V Enterprise, 400. It should be on the debit side in the debit column here in the bank statement. I am not seeing it. Right? Are you seeing it? All right. You're not seeing it. Right? Waterworks, $200. It should be here on the debit in the debit column. Are you seeing it? No, I'm not seeing it either. All right. Y Gilbert, $50. Right? Oh yes, I see it, $50. And I always tell my students, right, do not look for the names, because as you can see, Y Gilbert is there now, but you're not seeing Y Gilbert here. There is nothing in the description, right? They only have a check number, right? And that is how it will come sometimes on the exam. So I tell my students, don't look for the names, look for the number, look for the amount of money. All right. C Camper, 125. Yes, I see that 125 there, right? General Stores, 100. I'm seeing that 100. Yes. Gents Supplies, 175. I am seeing that. Yes, good. Right. Gas Supplies, 205. It should be here on the debit in the debit column. I'm not seeing it. Right? Are you seeing it? All right. So we're not seeing it. Right? And so it is not there. So we basically finish, right, with this, and I realized that there are some items in my cash book that did not I could not tick because they are not in the bank statement, right? Those 3 items there I did not see, those 2 I did not see, and this one with gas supplies, 205, I did not see that. And there are also some items in the bank statement that were not ticked, which would have meant that they are not in the cash book, but they are in the bank statement. Alright, so these 3 items, right, they are in the bank statement but not in the cash book, and this is very important information. So this is very important for you to do, guys. So after you do this, then you are basically halfway through, right? And I would suppose that this is very simple. So yeah, you are halfway through, and this is basically matching like when we are at primary school, right? So this should be very simple. All right, so we're moving on now, right? So the first thing that we need to do, right, is we need to update the cash book, because remember what I said earlier, that if there are items, right, in the bank statement but not in the cash book, then we need to update the cash book. So the first thing that we need to do is we need to update the cash book, and questions will tell you that you should update the cash book. All right, so we start with the closing balance on the cash book. The old cash book, you start with that closing balance. The old balance on the cash book was 320, so that is what we start with. The balance carried on the old cash book, it was on the credit side, but we put it on the debit side because what you are bringing it forward. All right, so you start with that, right? And this way of doing the updated cash book is what I like to call the short way, right? We talk about the long way in a little while. There are also some items that were missing, if you remember, right? There was a credit transfer from Y Seaton for $200, right? It was in the credit column of the bank statement, so I put it here on the debit side of the cash of the updated cash book, because it would have meant that no money is coming into your account by Y Seaton. So what Y Seaton did is he just deposit the money into your account, so you would not know that the money is in your account. It would come on your bank statement, but you just would not know. Then you have a standing order. Remember what standing order mean? You give the bank permission to make payments on your behalf. So standing order will always come on the credit side of the updated cash book, because it's always money leaving your account. And if you remember, it was on the debit side, right? It was on the debit side of the debit column of the bank statement, sorry. Right, and then you have bank charges. Again, bank charges will always be on the credit side of your updated cash book or your cash book, because it is money again leaving your account. Alright, and so we have finished entering the 3 items that we saw on the bank statement that were missing from the cash book. We enter them up now, and so we now need to balance off the cash book, right? So we add up both sides. This side is 520 and this side will be 150, and then we find the difference between them and we get $370, right? And so the cash book is now up to date. Alright, if you miss anything that I said, just go back over the video, right? Pause and you can go back. Alright, now there's another way of updating the cash book, which is what I call the long way, right? And you can write back everything that was in the old cash book. Write back everything, right? Everything as is. The only thing you wouldn't write in is the closing balance, right? Because you're going to get a new closing balance. So you write back everything in the old cash book and just put in these 3 items that were missing, and then you balance it off again, right? I call that the long way because obviously you have more writing to do. Alright, so you can decide whichever way you want to use. Alright, now when making up the bank reconciliation statement, there are 2 ways to do it. You can start with the cash book balance, as well as you can start with the bank statement balance. So I'm going to show you how to start with the cash book balance, and the reason why it is important for you to know both ways is because on the exam they can ask you for both method. I mean, not both method, but they can ask you for any one of the 2. All right, so this is a bank reconciliation statement, right? And a rule of thumb when you're making up or starting the bank reconciliation statement with the cash book balance is that you should always add unpresented check and less late lodgement. That is the rule. So you just have to remember that rule, right? Anytime you start the bank reconciliation statement with the updated cash book balance, you should always add unpresented check and less late lodgements, right? It is important for you to remember that. Now, where do we find unpresented check? Right? See the unpresented check here. Where do we find unpresented check? Just remember that unpresented check is checks that you pay out or that you draw, right? So in your bank account or in your cash book, sorry, right, it would be on the credit side. So unpresented check are always those items that are not ticked on the credit side of the cash book. You get that? Unpresented checks are items that are unticked on the credit side of your cash book. And similarly, late lodgements are those items that are unticked on the debit side of the cash book, because late lodgements are checks that you receive but you bring them to the bank after the bank statement is drawn up, or you bring them to the bank late. So you start with the balance as per updated cash book. So as you see, my updated cash book balance was $370, right? So what I'm going to be doing, I'm adding my unpresented check. There were 3 unpresented check, right? So I add them. I have 805 here. So some persons like to put, since you're adding, you just put everything over here and add it up. It can work like that, so that's not a problem. And then your late lodgements, right? So we have 3 late lodgements just the same. So you add them up, you get 250, and you subtract it now from 1,175, and you get 925, right? And that is now the balance as per bank statement. It is important for you to note, right, that, and the good thing about bank reconciliation statement is that you can check back your answer, especially if you are given the cash book and the bank statement. You can check back your answer. See balance as per bank statement 925, and look at the balance on the bank statement at the end of the month, 925. So I know right off the bat that my working out is correct, and that's the beauty about bank reconciliation statement. Now let's look at how to do the bank reconciliation statement if you are starting with the bank statement balance. Basically, the rule of thumb, right, is you're going to do the opposite. So when you're starting with the bank statement balance, you are going to do the opposite. So you are going to add late lodgements and you are going to less unpresented checks. So it's pretty simple. So we start with the balance as per bank statement, 925. We add late lodgements. So all our late lodgements, we add them up, 250. We add it to this, we get 1,175. Then we less unpresented check. We have 3 unpresented checks. Add them up, you get 805, and then you subtract it from this, you get 370, which is the balance as per updated cash book, right? And you can look and see it is the same $370 that was on the updated cash book. And there you have it. That's basically how to do a bank reconciliation statement. However, how do we treat bank overdraft, right? I'm just going through everything so that you can just get it right off the bat. So when there is a bank overdraft, then the cash book, right, will have a credit balance. And what that means is that the opening balance will be on the credit side of the account. Alright, like in this example. If you realize the opening balance is on the credit side, and this will signify an overdraft on the account. Right, now when there is an overdraft, the rule of thumb, right, when making up the bank reconciliation statement is that we add late lodgements and we less unpresented checks. So it's if you look at the rule, right, the rule when you are dealing with an overdraft, it is basically the same rule as when you are starting the bank reconciliation statement with the bank statement balance. But I did not want to say that initially, because I don't want to throw you off. So you just remember this rule, right? It is the same as when you are starting the bank reconciliation statement with the bank statement balance. And that is how you treat overdraft. You will normally see overdraft being indicated by O/D, right? That is how you normally see they refer to overdraft on the bank statement. All right, so let's look at the points and concepts that we ought to remember, because this topic have a lot of concepts that you will have to remember. So the cash book and the bank statement are supposed to be equal, or showing the same balance, and this is not always the case, and that's the problem, or hence the need for an updated cash book and the bank reconciliation statement. If there are items on your bank statement but not in your cash book, then you need to update the cash book. Very important, guys. And if there are items in your cash book but not on the bank statement, then you need to quote unquote update the bank statement by creating a bank reconciliation statement. Another very important point. In creating the bank reconciliation statement, you can either start with the updated cash book balance or the bank statement balance. Now, when you are starting the bank reconciliation statement with the updated cash book balance, the rule is that you should add on presented check and less late lodgements. And when you are starting the bank reconciliation statement with the bank statement balance, the rule is that you should add late lodgements and less unpresented checks. And basically that is how you would deal with an overdraft as well. That rule would apply to an overdraft as well. So guys, there you have it, bank reconciliation statement. I hope it was informative for you. If you did not get something, pause the video, rewind the video, and just go back over, right? Please remember to like, subscribe, share, right? Hit that notification bell so that you never miss a tutorial. If you need additional help, or if you need additional past paper questions on bank reconciliation statement, feel free to hit me up at everythingbusiness876@gmail.com. Thank you guys for viewing. I know this is a long video, right? Thank you for viewing. In my next accounting video rather, I will be looking at income statement, right, and the statement of financial position. You do not want to miss that. All right, so stay tuned and see you soon.